Well, Australia's biggest business lender, National Australia Bank, has warned of rising funding costs. The bank's respected business survey is already showing higher interest rates starting to bite, and confidence is at a 14-month low. NAB Chief Executive Cameron Klein says that demand for corporate borrowing is weak and it won't pick up until next year. Philip Lasker reports.
Unfortunately, it's all too familiar, a NAB profit result that misses its mark. Although the bank does have its supporters.
The revenue performance wasn't as bad as it first appeared, and the bank is promising that it's emerging with some decent momentum across a number of its franchises.
Third quarter cash earnings of $1.1 billion were 22% higher but below expectations. The result was helped by a halving in bad debt charges to $510 million. But total business lending was down 1.1%, and it looks like a long haul back.
The pipeline remains strong, but we do now believe that given the recent volatility in the global economic environment and a federal election round the corner, the return to business system credit growth may be delayed longer, more likely a feature of 2011.
The bank is battling headwinds through its exposure to the UK, a $24 billion portfolio of exotic assets, and the rebasing of its earnings in its retail business, where it seems content to continue a strategy of offering heavily discounted home loan rates.
We are pleased with the momentum our business is achieving. And by maintaining a competitive proposition, we think it is the right thing for the business as well as our customers.
That's not to say NAB won't respond to increasing funding cost pressures.
In the European banking system, for example, they're looking to roll over 3 trillion euros of bank funding in the next couple of years. Now, the Australian banks will be competing in that marketplace, and what we're seeing is their funding costs increasing regardless of what the RBA does.
The National Australia Bank's latest business survey showed higher interest rates were already bearing down on confidence. July's confidence measure of 2.4% was below June's and at a 14-month low.
What sort of worries you a little bit about the survey is the more you turn to the forward-looking indicators like forward orders or confidence or stocks, they tend to be weaker than the current indicators.
Not only does the gap between the robust mining sector and the sluggish retail sector seem to be widening, but the survey shows the weakness is broadening to other areas like construction. It's forced a change in NAB's forecast of steady official interest rates until Christmas.
I would start to get concerned if things continue to deteriorate from here. We think it's already soft enough to put the Reserve Bank on hold until early next year.
But given the global funding pressures, can the major banks do the same?